and welcome to another episode of Malone Bailey's official podcast, Everybody Counts. Thanks for tuning in. I'm Carolina Ocategui from the recruiting department at Malone Bailey. Hopefully this isn't your first time tuning in, but if it is, welcome. Our podcast, Everybody Counts, features various perspectives on a variety of topics, from the latest SEC and FASB updates to discussions on recruiting, retention, and more. Everybody Counts explores trends and hot topics that affect us and those in our business. Tune in to hear from partners and staff alike. The conversation is versatile and everybody's input counts. The focus of today's conversation is looking ahead to what we need to know and keep an eye out for in 2025 and the upcoming years. 3 FASB accounting standard updates, otherwise known as ASUs. I'm delighted to be joined today by Mariano Frugon, one of our partners at Malone Bailey, who will share his thoughts on these accounting standards updates. Welcome, Mariano.
Thank you, Carolina, for having me.
Absolutely. Mariano, before we move on to today's topic, can you share some information with us about your background and what you do here at Malone Bailey?
Sure. Let me tell you a little bit about myself. I'm originally from Argentina, where I actually graduated in accounting, as well as I got a degree in business administration. Right off of college, I actually started my public accounting career at PwC Argentina, and in 2015, I actually moved with PwC to the US, where I actually spent almost 9 years and my last 2 years doing a tour in their national office. Right after my tour finishes, I actually joined Malone Bailey as a partner, and I'm currently responsible for providing technical accounting and auditing consultations, and as well as I actually serve some clients.
Wonderful. Today's conversation is going to be an interesting one. It's now February 2025, and FASB has a few accounting standard updates that you should be on the lookout for. We have the income statement reporting comprehensive income expense disaggregation disclosure. That's titled Disaggregation of Income Statement Expenses. Income taxes, topic 740, titled Improvements to Income Tax Disclosures. And intangibles, goodwill and other crypto assets, subtopic 350-60, titled Accounting for and Disclosure of Crypto Assets, just to name a few. So excited to have Mariano here with us today to shed some light on these ASUs that are coming into effect in 2025 and these next coming years.
Thank you, Carolina.
Let's start with an ASU that has to do with income statement reporting comprehensive income, expense disaggregation disclosure, subtopic 220-40. The title is Disaggregation of Income Statement Expenses. Mariano, can you share with us why FASB is issuing this ASU on income stat?
Sure. Well, the FASB is actually issuing this ASU to improve their disclosure about public business entities' expenses. Additionally, it's addressing requests from investors for more detailed information about the type of expenses in commonly presented expenses captions, such as cost of sales, SG&A, and research and development. As you may know, before this new standard, there were not many disclosure requirements around expenses, so this will give additional visibility to investors.
All right. Can you share some of the main provisions of this ASU?
Sure. This ASU actually requires public business entities, or known as PBEs, to disclose in their notes to the financial statements specified information about certain costs and expenses at each interim and annual reporting period. Specifically, they will require to, first of all, disclose in a tabular format the amounts of specified nature expenses included in each relevant expense captions, as I'll cover now. First of all, purchases of inventory. Second, employee compensation. Third, depreciation. Then intangible asset amortization and depreciation depletion, and amortization recognized as part of the oil and gas production activities. Just to clarify, a relevant expense caption is an expense caption represented on the face of the income statement with continuing operations that contains any of these expense categories. Second, the new ASU will require companies to include within that tabular disclosure certain amounts that are already required to be disclosed under existing standards. Third, registrants will be required to provide a qualitatively description of the amounts remaining in the relevant expense captions that are not separately disaggregated quantitatively. Additionally, companies will need to disclose the total amount of selling expenses for each period, and within their 10K, they will also need to include the definition of what's included as selling expenses. Something to clarify is that the new standard does not change any of the requirements for the presentation of expenses on the face of the income statement. So this only impacts the footnotes.
Mariana, can you remind us of when these changes go into effect and who is going to be affected by this ASU?
Sure. This ASU is effective for public business entities, so as I said, PBEs, for annual reporting periods beginning after December 15, 2026, and interim reporting periods beginning after December 15, 2027. So let's put an example. So if a calendar year-end company, they would actually be required to present these disclosures in their year-end 2027 financial statements for the first time. However, early adoption is permitted. One more thing to consider is that public business entities should apply the new standard prospectively. Said it differently, the disclosure required by the new standards do not need to include in financial information for reporting periods beginning before the effective date that are being presented for comparative purposes, with financial statements issued for periods after the effective date. However, registrants, as I said before, can elect to apply the new standard retrospectively to any or all periods presented in the financial statements. So as I said before, in an example, the 2027 financial statements, if the company decides to apply it retrospectively, they can also present those same disclosures for the 2026 comparative period.
Oh, that's great. Thank you. So the last question that I have for you regarding this ASU is, what are some things to keep in mind that pertain to this ASU?
Sure, I had two things I wanted to highlight about this new ASU. The first one is that while this new standard does not apply to private companies, if your private company is contemplating an IPO, then they will need to comply with the new standards. So that's something to watch out. And the second one is that this new standard doesn't provide any accommodation on terms of adoption period. So, for example, emerging growth companies, or known as EGCs, don't have any additional time or any exceptions. So one advice for companies is to make sure that they understand the disclosure requirements and assess if the information that they need to be disclosing is readily available.
Thanks for sharing this important information, Mariana. I would like to ask you about the income taxes topic 740, titled Improvements to Income Tax Disclosures. Mariana, why is FASB issuing this ASU?
Well, Carolina, there's many reasons why FASB is issuing this ASU. But the main reason why the board is issuing this update is to enhance transparency and provide decision useful information around income taxes to the financial statement users.
For this ASU, what are some of the main provisions?
Yeah, among other things, the amendment introduced by the new ASU requires PBE on an annual basis to disclose specific categories in the rate reconciliation and provide additional information for reconciling items that met a quantitative threshold. A quantitative threshold is defined by considering if the effect of those reconciling items is equal or greater than 5% of the amount computed by multiplying pre-tax income or loss by the applicable statutory income tax rate. Additionally, the amendments require that all entities disclose on an annual basis the following information about income tax paid. First of all, the amount of income tax paid net of refunds received, disaggregated by federal, state, and foreign. Second, the amount of income tax paid net of refunds as well, disaggregated by individual jurisdiction in which income tax paid is equal to or greater than 5% of total income tax paid. Finally, the amendment also requires that all entities disclose income or loss from continuing operations before income tax expenses or benefits disaggregated between domestic and foreign, as well as income tax expenses or benefit from continuing operations disaggregated by federal, state, and foreign.
Can you remind us of when these changes go into effect and also who will be affected by them?
Sure. The ASU is effective for public business entities, PBEs, for annual periods beginning after December 15, 2024. So, for calendar year-end companies, as I said on the example before, the year-end 2025 financial statements will need to have this disclosure incorporated. For entities other than public entities, the amendments are effective for annual periods beginning after December 15, 2025. So in my example, a calendar year-end company would actually require to have it on their year-end 2026 financial statements. Similar to the previous one, early adoption is permitted, and the amendment should be applied on a prospective basis. However, retrospective application is permitted.
What are some questions to be mindful of as it pertains to this ASU?
Sure. For this particular ASU, a couple questions to be mindful of. First, from a rate reconciliation perspective, companies should be thinking about how will they identify and categorize the specified items required for the rate reconciliation, and if there are any significant reconciling that meets the 5% quantitative threshold. From an income tax paid perspective, companies should be thinking how will they disaggregate the amount of income tax paid, net of refunds received by federal, state, and foreign taxes. Another matter to think about is if there are individual jurisdictions in which income tax paid is equal to or greater than 5% of total income taxes, because that would also trigger additional disclosures.
Great insight, Mariano. Thank you. Yes. I think we have maybe time for one more. The last ASU I'd like to ask you about is the intangibles, goodwill, and other crypto assets, subtopic 350-60, titled Accounting for and Disclosure of Crypto Assets. Why would FASB be issuing this ASU?
Yeah, the purpose of this ASU is to improve accounting for certain crypto assets by requiring an entity to measure those cryptos in fair value recognized in net income. The amendments also improve the information provided to investors about an entity's crypto asset holding by requiring them to disclose significant holding, contractual sales restrictions, as well as changes during the reporting period.
What are the main provisions for this ASU?
Yeah, so the main provisions for this new standard are, first of all entities holding crypto assets that met the criteria listed in the standard to subsequently measure the in-scope crypto assets at fair value with the remeasurement recorded in net income, as I previously said. Second, it requires companies to separately present in-scope crypto assets from other intangible assets on the balance sheet. Third, requires companies to record the impact of the remeasuring those crypto assets separately from amortization or impairment of those other intangible assets in the income statement. And last but not least, the requirement for additional disclosure including significant crypto asset holding as well as reconciliations of beginning and ending balance of crypto assets. One more thing to consider is that this new guidance should be applied using a modified retrospective transition method, which with a cumulative effect adjustment recorded to the opening balance of retained earnings as of the beginning of the year of adoption.
Well, for these when would these changes go into effect, and who would be affected by this one?
Sure, the ASU is effective for all entities for fiscal year beginning after December 15, 2024, including interim periods with those fiscal years. So similar example to before, if a calendar year-end company will require this disclosure and valuation of their crypto assets starting on year-end 2025. Similar to the other two, early adoption is permitted for both interim and annual financial statements, and if an entity adopts the amendment in an interim period, it must adopt them as of the beginning of the fiscal year that includes the interim periods.
Thank you, Mariano. Remember, you can find this information on our website under resources. You can also find more information on FASB.com. Well, that concludes my questions for now. Thank you so much, Mariano, for taking the time to talk with me today and share more about these topics. We're going to switch gears now and play a little game we like to play on the podcast. It's called This or That. So I'm going to ask you a question and you'll choose what you prefer. So Mariano, beach or mountains?
Beach.
Soccer or football?
Definitely soccer.
Messi or Cristiano Ronaldo?
That one is probably the easiest one of the three. It's definitely Messi.
Messi, all right, great. Yes, huge Messi fan too. Thanks again for the helpful information today, and I'm very appreciative of you taking the time out of your super busy schedule to chat with me. Mariano, I had a great time with you. And to everyone listening, we appreciate you listening in and invite you to check out our website, www.malonebailey.com, for more information about public company audit services, as well as some other useful resources. Thanks again for listening.